Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Larry Williams. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, FTSE Russell, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on futuresradioshow.com. Today I spoke with trader and author Larry Williams. Larry talks to us about how he got started in trading 57 years ago. He explains why he started developing indicators, how he believes it is the trader, not the indicator. Larry talks about being a conditional trader using market cycles, COT data, seasonal patterns, and technical indicators. Last but not least, Larry shares with us how being positive has been huge for his success as a trader. And he shares his 4 pillars to maintaining good physical and mental health over his long career. So without further ado, let me take you right to the interview with Larry. Larry, you've been trading for 57 years. How did you get started in trading?
Kind of embarrassing, isn't it? I think of 57 years of doing nothing but looking at charts. Like, there must be life beyond this, right? But it all started in 1962. The stock market crashed when John Kennedy rolled back steel prices. And I don't come from a family that had any money. My dad worked in an oil refinery when I was in college. And I asked somebody, what does that mean? And the guy said, well, if you would have gone short yesterday, this stock was down like 2 points, and you could have made $200. It doesn't seem like much money now, but in 1962, $200 would buy a couple of cars. It was a lot of money. And that's like, whoa, really? If you just guessed the stock went down, you can make money? This is for me. How do you do this stuff? Because that, I grew up working hard on ranches and stuff and refineries, and I got, you can make money just guessing up or down without going to work. Hot damn, I am all in. Where's the door? And it's the hardest work I've ever had ever since.
Well, talk to us a little bit about how you started to develop your strategy and what markets were you trading back then?
Well, I began trading stocks. Once I got bit by the bug, I started going to the libraries and reading all the books, and several books stand out, but the one that most stands out was Joe Granville's book. And Joe was a huge prophet at that time and very wide following. Fortunately, I got to know Joe and his wife Karen later on. That was one of the highlights of my career, get to pal around with Joe. So I had his indicators, and some of them worked and some of them didn't seem to be working. And it's also graphical, because back then we just had charts we did by hand, and I actually started as an art major in college. Wasn't very good. I realized that pretty quickly, but I could draw, I could trace, and I could see things that I wanted to make an indicator out of, and I didn't have a background in math, but I knew visually what I wanted to accomplish, and it really, I think, was my art background that got me to think about indicators. And of course, back then, there were precious few indicators. There were maybe, 10, something like that. Now there must be 10,000. So it was unplowed ground back then as opposed to now. And I had some ideas, and I wanted to put these in a graphic presentation.
So you started off with stocks, looking at charts, drawing your own charts. How long before you became a full-time trader and then eventually got your way into futures, commodities?
Well, I started trading commodities in 1967, maybe 67, maybe 60. I'd done really well trading stocks, and I was in a brokerage firm one day, and one of the brokers said, "Why don't you trade commodities?" I said, "Well, they're so risky." And he said, "No, they're no riskier than stocks." He said, "What makes them risky is you only put up a little bit of money, the margin. They don't fluctuate any more than stocks do. Their volatility is the same, but because you're putting up 5% instead of 100%, they're more risky because of that." And commissions were lower back then. Commissions in commodities were substantially lower. We'd pay maybe 1.5% of the purchase price of 1,000 shares of stock was your commission. It wasn't a flat fee. It was a whole different world back then. The brokers back then were the wealthy guys in town. Now they're all figuring out what to do. They're online. That whole business is a huge revolution. So I said, "Well, gee, let me look at that." And so he introduced me to something called pork bellies. And sure enough, the stuff I was working in stocks worked pretty well in pork bellies. So I started trading pork bellies, and then one thing led to another, and started trading everything.
So during this time, was trading all you did? Did you do anything else? Any other businesses?
No, I haven't really had a job since maybe 1966, 67. This is what I've done, which scares me because I think if I ever needed a job, like who would hire me? I have no job experience, I have no letters of recommendation, I have nothing. I always think, well, I better keep my trading good.
It's so funny hearing you say that because I've thought that exact same thing to myself so many times. I'm like, I better stay good at this because God forbid it doesn't work out. Where am I going?
Who's going to hire me?
Exactly. Yeah. Who's going to hire me? Larry, I want to move on and talk about you developing indicators. You've developed several unique indicators, Williams percent R, the ultimate oscillator, and many others. Why did you get involved in developing indicators?
In part, as I mentioned earlier, there weren't many indicators back then. And because all I was doing was looking at these silly charts, I had some ideas, especially in terms of accumulation. One of the things that Joe Granville turned me on to was that you can measure accumulation coming into the marketplace. And a fellow by the name of Dave Bostian had done some work on measuring accumulation. And that's partially it, but I saw other relationships, looking at the net change from the opening to the close, where Joe just looked at close to close, and David Bostian looked at the range, the close within the range of the day. And so I came up with my Williams accumulation formula back then that used the open, high, low, close. And within, 6 months, the Wall Street Journal stopped publishing the opening price. I don't know if that's because of the indicator or the Wall Street Journal or who knows what happened, but it was a really good indicator to measure accumulation. So that was one of the tools. Percent R was to measure overbought, oversold. Now I can measure momentum with it. And then I wanted to measure tools for measuring cycles. That was important. And I wanted to measure tools when I got involved with the Commitment to Trader report way back in 1972. So each tool I developed has a different purpose. My ultimate oscillator, there was a jillion oscillators, but it combines 3 different time frames. Usually an oscillator, say 14 days or 28 days, whatever. Well, that cycle's dominant in the market, but it comes and goes. So I thought, what about an oscillator where we combine equally weighted 3 different time frames? And that was the ultimate oscillator. So a lot of it was just a thought process, and they figured, oh, would that make sense? I don't think I ever designed an indicator just running numbers. I always said, well, what would I want to accomplish? What should an indicator do? And then started from that premise to go into the market data to see if that was possible.
Having developed my own indicators myself, I completely agree with you. What are you trying to accomplish by creating this indicator? And for me, I wanted the indicator to do something that I was unable to get from other indicators. And once I did finally develop my main indicator, it became a huge part of my strategy. I'm curious, with all of the indicators that you've developed, how big of a role, how important of a role are your indicators to your strategy?
the indicators are inputs to enable me to make a decision. But I think today, in today's market, a trader is absolutely wasting his or her time trying to come up with another indicator. They've all been invented. Don't try to recreate the wheel. Instead, spend more time understanding yourself, your habits, your approach to the market, working out your strategy. All the indicators are there. There's too damn many indicators, but there's not enough good traders. So it isn't the indicators, it's the individual's application of the indicators. So I'd say narrow down your indicators. Each one does a specific job. Understand how those work, and then learn the art of trading.
I couldn't agree with you more, Larry. I believe trading is an art. And I've said many times on this show and on social media that execution is everything. And I want to talk a little bit more about you and how you use indicators. You just mentioned that the indicators help you make a decision, a trade decision. How? How are you using indicators in your strategy to make trade decisions?
First, I make certain that my indicators are not redundant. So if I use, say, an MACD, a stochastic and a percent R, or a Bollinger percent B, they're all going to give me the same message. I only need one of those. So I eliminate redundancy. Each indicator must serve a purpose. But my basic strategy is to look for conditions. I'm not really a technical trader as such. I'm a conditional trader. I look for conditions that in the past have caused markets to move up or down. Let's take the case of a buy signal. If the public has been heavily short a market, it's probably going to rally because they're usually wrong. That would be a condition. Or maybe the market is, say, gold is overvalued. You can actually value gold versus, say, treasury bonds and find a value measurement. So I look for those conditions. Once I get a culmination of those, it's then, well, we might rally now, we might rally in three months from now or 3 weeks from now. So I need a sense of timing. And for that, Anthony, I'm going to bring in cycles and seasonals. Cycles, I can run cycles and say, oh, the cycle suggests a low coming up, or maybe it's buy here, right now. And the seasonals can help me in the same fashion.
Is this the way you've always traded, or how did you go about developing this strategy, this process?
No, I didn't always trade this way. I've tried to trade this way. And I guess since 1973, that's been the idea behind most everything. I was very fortunate to have a guy named Bill Meehan come into my office one day. He'd been a member of the Board of Trade, and he was a conditional trader, and he taught me about conditions. Nobody talked about conditions. Very few people even do now. But Bill gave me the concept of conditions in the marketplace. And that was new because I had a lot of great technical stuff I was trading with, but I had no sense of these conditions that cause markets to move. Interestingly enough, Bill kind of mentored three of us, myself, Keith and Kevin Campbell, who now run one of the largest commodity funds out of Baltimore, Maryland, in the world, and another guy, Chet Conrad, who did well enough that he retired. So conditions have really meant a lot to me over the years.
Hey everybody, I want to take a moment to thank one of our sponsors, FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 Index futures, contract symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. Okay, can you walk us through an example, either a recent example or maybe something that you're eyeing right now, of how you're identifying the conditions and how the trade sets up, and maybe eventually how you use the indicators to help you get in the trade?
Sure. Like right now, if we look at, say, I'll bring up a chart. So I'm looking at a chart of wheat right now. And I see that the seasonal low in wheat comes around the end of November. That intrigued me in terms of time. If I look at have the commercials been buying or selling this market, or what's the public been doing right now, it's not quite as clear of a view. I'm going to put a chart on. So I see right now that the commercials have not been aggressively long or short this marketplace. So in my instance, what I'm going to say is, well, I'll come back and look at wheat later on in the year. But right now, I don't see the commercials in here buying. They were heavy buyers in the market right at the last low that we saw, but they're not heavy yet. So I want to watch them, but so that trades off the table. If I look at, say, gold right now, theirs presents an entirely different picture. If I look at gold right now and I see what the commercials are doing, I see they've actually been selling this market, and the public, bless their heart, has been buying gold. So that's a conditional setup to look for a sell. Then I can look at cycles in the gold market. I can look for the seasonal pattern, which in the gold market, usually gold goes down from the 1st of October until the end of the year. So now I start to develop the trade. That's all on weekly charts. From there, I go to daily charts to look for an entry into the market.
Okay, so you just mentioned on how you were looking at the conditions in wheat, and then you saw the conditions in gold that potentially set up for a sell. And then you mentioned how you would then go look at the cycles or the seasonal patterns. Explain to everybody how you use cycles.
Well, the cycles go way back to, I think, when I first started trading the markets in 1962. I just inherently felt there are cycles and things. Maybe that's the way I was raised in Montana, where we have winter, spring, summer, fall, and winter's a lot longer than any of the other 3 seasons. But there was a sense of cycles, you know. I worked on ranches, and there was a definitely cycle to the reproduction rate of cattle and to wheat production. So in my genes has always been the idea that there are cycles. So I started looking at something called the Foundation for the Study of Cycles that Edward Dewey and Gertrude Shirk were doing. And I got heavily involved with them, and eventually was able to meet W. DeGan's son at one of the Cycle Club meetings in New York City. Got to know him, which is really fascinating. But what I found, to make a very long story short, is cycles clearly exist, but they're very ephemeral. They come and they go. They bounce all over the place. Gold stocks, rather, have been in a real clear 80-day cycle in 2019. It does not mean they will be in 2020. It would be too easy if they were. Some other cycle will come into existence. So you have to watch these cycles as they come on and off the dance floor to help give you a sense of timing. Some have been there a long time. The 4-year cycle has been a long time. The decennial cycle that was written about by Edgar Lawrence Smith way back in the 1930s. It's there. It's subtle, and it's there.
When you were on the Trading Futures show and you were sharing your charts with us, you could see where the cycles were predicting their market could go with a line chart. How are they getting on your charts? Is that automated? Are you putting information in each time to get them? Tell us how that works.
There are several softwares out there that I use. I'll tell you in a moment how you can do it yourself, but I use a software called Timing Solutions. There's 3 or 4 softwares that will enable you to ferret out the cycles in the marketplace, but the software doesn't do the work. You got to do the heavy lifting. You got to go and figure, well, you know, do I want to use weekly data, daily data, intraday data, which cycle is fading in, which is fading out? It's not an easy task. I spend, I don't know, probably 20 hours a week on cycles. Of course, that's for all the markets. This is what I do, but the software just doesn't run, say, here it is. It doesn't hand it to you on a silver platter. It says, here's a shovel, start digging. However, what you can do without any of the software is just look at the distance between the last, say, 2 highs. Let's say that's 32 days. Subtract or add that to the low in between, and that's about where the next low is going to come, because that accounts for cycle shifts. So if peak to peak is 32 days, that the low isn't going to come 16 days in between. It may, but it's probably going to come 10 days in between. It's going to be staggered between those points. But if you lead out the current high to high cycle from the low in between, you get a pretty good idea where the next cyclical low will be.
So we have conditions, then we have cycles, seasonal patterns, COT data, and then
I go to the technical stuff. At that point, once we're at that point, I go, okay, now I'll bring in the technical tools. And the simplest one is just a trend line break. Tom Demark did something called qualified trend line, and I've added a little bit to it. That's the simplest, nice intermediate term entry you're ever going to find.
And that's just because you already know the direction you want to be in.
Exactly. The problem with the trend following guys, they say they don't know what the market's going to do. They'll just take all the buy signals and sell signals, and eventually there'll be a trend. And they're right. And there'll be a lot of whipsaws along the way, and they haven't made much money. But if I have a sense the market most likely will go in that direction, then I'm going to have my buy signal, a trend line break to the upside if it looks like it's going to go up.
Yeah, because you're focused on the direction. So now you're just looking for, I'll call it confirmations with the indicators.
Exactly,
to get you in.
Anthony. Yes.
All right. Well, talk to us about once you get to that point where you're using the indicators and you get in. Is every trade the same size? How are you working stops? How are you looking to exit these trades?
Well, you want to talk about theory or reality? In theory, your risk should always be the same on every single trade. Now, reality, it isn't in my own trading. Sometimes it's generally in the same area of somewhere between a 2 and 4% risk. Might be a little higher occasionally. If you want to win a trading championship like I have or my students have, you're going to have to bet more money because you're going for all out here. But as a professional trader, you don't want to risk, I don't think, more than 5% of your money on any given trade, and probably not have on more than 4 trades at a time.
Okay, now what about position sizing? How are you determining your total contract size for each trade?
So the number of contracts I'm ultimately trading is a function of volatility, how far away my stop is.
All right, take us through this scenario now. That you're in the trade's going your way. How are you now determining targets? And at this point now, are you trailing stops? How does all that work?
You mean trades going your way? What a novel idea. What I'm doing at that point, and once I'm in a trade and I get some profit in the trade, I have a target in the market, an idea where prices should go based on technical structure of the market, and I have my stop. And it's going to stay that way. Once the market breaks out of a congestion area and starts to move, then I'll start using a trailing stop. But until it's out of the congestion, I'm not going to change my stop because it still hasn't really established a strong trend direction. Once it does, then I can bring in a trailing stop. So my initial stop comes up and I still have my target. So now either I'm going to get stopped out or stopped at my target.
And how are you determining targets?
Oh, got another couple hours. Long story. The best guy with targets, I think, was George Seaman, S-E-A-M-A-N. Get any of his books. He wrote in the 1940s. He did a great job.
A couple more questions before we get into rapid fire, Larry. You've been through this. You went through the process of developing indicators, building your strategy. For the new traders out there listening to this, what would be your advice to them in building their strategy?
If you're going to develop a strategy, the most important thing is to start with what's the idea? What's the premise? Why should this work? Moving averages don't work. Running exponential average, that stuff doesn't work. You have to say what causes markets to move. Maybe a price pattern does. Maybe the way volume comes into the market. I don't know. I don't use volume. But you need to establish a concept, a premise of why something should work. Then do your research based on that premise. You're probably going to find out most all the time your premise sucks. It's wrong. But occasionally you'll find, oh, yeah, there is something here. And then you can further refine that.
Larry, you're 77 years old and in great shape. We talked about how you've been trading for 57 years. What have you been doing over the years away from the screens to keep yourself in good physical and mental shape?
Well, I think I've tried every health program that's come along. I've been vegetarian. I've been, you name it, I tried it when I lived in California. I went through every head trip there was, from S to Eureka to Scientology to Nepenthes to you name it. And I got a lot out of all of that, actually. Every single thing had one bit of information that was worthwhile. So that was a mindset, I think. And my mother gave me a mindset to be positive. I think that's just incredibly helpful. Like, yeah, I'm going to be positive. I'm going to try to find out how I can't do something better. Health-wise, what I boil it down to for myself is there's 4 pillars. One is exercise. You got to keep moving. You know, Satchel Paige said it best, keep moving, don't look back. So you got to stay flexible and keep moving. Clearly, what your parents told you about diet was right. You have to be choosy about what you eat. You have to deliberately make choices and say this is good and that's bad. And that's going to vary for everybody. Everybody's body is probably a little different. It didn't work for me to be a vegetarian. I was for 10 years or so, and then I started running marathons. That didn't work at all for me. So you have to figure out you and what you're doing. Sleep is huge, I think. And that's the third pillar. And the fourth pillar is stress. You need stress in your life. Most people don't have any stress, and so they're bummed out. It's not fun. You got to have some stress. And you can take it from experience from me. You can have way too much stress in the market. You can relate with that, I'm certain, Anthony, as a trader. So you have to balance out that stress. And it's all, my dad was, I didn't go to college or anything, but what a smart guy. One day I was doing one of my stupid diets or something. He said, Larry, all things in moderation. I go, yeah, he's so right. He's so simplistic in that. So you need some stress, moderate. You need a really good diet. And then I've taken some supplements along the way. And I think that your lungs are probably the most important thing to keep going. Everyone I've seen who died on a respirator. They couldn't breathe. So lung function is huge, and I really work on lung function through exercise. I'm not going to smoke. I'm not going to vape. I'm not going to. Nothing goes in my lungs except good air.
I love everything you said, specifically positivity, because for me, as a person who at the beginning of my career, coming into it was very positive. I got negative because I was losing. And when I finally started thinking positive again and saying, you know what, I'm not going to let this beat me. I'm going to go out there and I'm going to compete. I'm going to do my best. I'm going to enjoy this. I'm blessed to be able to do this. So let me enjoy it a little bit. And I really started to turn things around by just having that positive attitude. You lose with dignity. You go home, you try and fix it. But just staying with a positive mindset has done wonders for me.
Well, and I think what you touched on, I used to manage heavyweight fighters. We fought for world championships. And my very best fighter was a guy named Mike the Bounty Hunter. And before one of our title fights, we were talking about, he said, I'm just going to have fun. He said, I might lose. I might get my head knocked off. I said, I'm just going to have fun tonight. And that attitude is such a great attitude. I could lose in my trades, but you know what? I'm a survivor. If I lost all my money tomorrow, I'm going to survive. I'll figure it out. So if you get too stressed out about what's going to happen to you, you're not going to enjoy it. So you have to have an approach that says, hey, I'm just going to have a good time. And whatever happens, happens. And that, I think, relaxes you to perform much better.
Absolutely. Last thing before we get into rapid fire, we talked about market cycles today. We're recording on October 3rd. Are there any market cycles that you're eyeing right now that we should be aware of?
Year-end rally for stocks. I'd say it's a 95% probability we're going to have a good, strong year-end rally based on that. Usually happens and cycles are now pointing for that.
Interesting. What would be a trigger for you to get in long?
Just getting to Thanksgiving. If I can live that long, I'm going to be fully aboard.
Larry, you're the best. We have rapid fire questions next if you're ready for those.
Shoot.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. You can try it now for free at tryttnow.com. Larry, what trader has influenced your life the most and why?
Oh, without a doubt, Tom Demark, because Tom helped me see things that nobody else could see. Tom helped me organize thoughts in my mind. Tom has just been an amazing supporter of mine over the years, but really has a different way of looking at price action and taught me how to look at price action differently than other people see it.
What was one of the hardest things for you to overcome in trading?
Oh, it's still the hardest thing for me. I hold on to winners too long. I don't get out when I should. I get way too greedy.
How has your trading process evolved over the years?
Well, I'd like to think it's gotten a little better. I don't trade as actively as I did when I was a young kid. I'm much more position-oriented and much more qualified in my trades. When I was a kid, I'd trade anything just to prove I could trade it. And when I was won the Robbins World Cup Trading Championship,
with trading bonds, S&Ps, and I think soybeans. Somebody said, "Oh, you can't trade anything but those three markets." Well, yeah, I can. So if you look at closely, you'll see suddenly I'm trading pork bellies and oats and a bunch of other things for a couple of weeks. Just say I can trade it. So I've gone from I can trade anything. I'm going to be very selective in my trades.
What is one attribute that you believe every trader should have?
Setting goals.
Favorite book about trading?
Zurich Axioms.
If you had to pick a profession other than trading, what would it be?
Oh gosh, I probably would have been an artist, but I wasn't good enough, or a writer. I went to school with some great writers, Ken Kesey, Stephen J. Cannell, but I wasn't good enough. Maybe a professional magician, or a sign painter. I started out as a sign painter. It's hard to say any one profession. There are 3 or 4 things that really have attracted me, but I wasn't good enough to do them.
What's the best piece of advice that you received about trading?
Don't bet big.
If you can go back in time and give the younger you a piece of advice, what would you say?
Figure out if this is for you or not. Some people are going to lose their money and their lives doing this, so you better wake up and internally know this is for you or it isn't for you. Because if this isn't for you, you're going down a really, really rocky road.
If you had an elevator pitch me your edge in trading, what would you say?
My edge in trading are the conditions that I use. That I'm a conditional trader. That's my edge.
Last question for today, Larry. What's your favorite thing to do when you're not trading?
Trade. Research. No, in my favorite world, I'd be fly fishing in Montana, or maybe rafting and doing something in the mountains, and have my cell phone on so I can check quotes.
Larry, I know you're not on social media, but tell everybody a website they can go to learn more about you.
Sure, they can go to ireallytrade.com. That's our website. A lot of free stuff there that I think they'll enjoy. And we have my weekly market commentaries called Larry TV. It's $30 a month, so it's not very expensive compared to everything else out there. And look at my trades, what I'm doing, trades I see coming up.
And all the times we've spoken, I never asked you, why did you name your website ireallytrade.com?
We named our website, or my wife came up with the name ireallytrade.com because people say, "Oh, William's a broken down old man. He doesn't trade anymore. He won the trading championship, but he doesn't trade anymore." I don't know. I still trade. I really trade.
That's great. Larry, it's such an honor to know you, my friend. You are such a great guy. I really appreciate you taking the time to speak with me on Futures Radio Show today.
Well, the pleasure is mine. It's an absolute honor to be here. So thank you very much, Anthony.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.